a lot of market participants, particularly track their financial space very closely, have been bullish on Diwan housing, and their faith has been reposed for the last 12 months. It's been one big performer. The question is, with housing prices or real estate doing what it is the performance that they did in the past 12 months, can that be replicated? And generally, what's the way ahead for Diwan housing, because it's now doing a lot more than what it was earlier? Kapil Wadhawan, CMD of the company, joins us right now on the line from Mumbai to talk about a lot of things. And Kapil, you would appreciate my question really by virtue of the fact that you've done so well as a business and as a stock over the last 12 months. It's imperative to ask you, what are your plans for FY15? Strategy, outlook on profits and growth, considering that we may possibly have a new government at hand tomorrow.
Thank you. There's honestly no change in the strategy. We will continue to do what we have been doing for the last 30 years, and that is to focus on our core segment in housing finance. The lower and the middle income segment continues to be a space where we have a leadership position in tier 2, tier 3 markets. So honestly, the focus will be on ensuring that we sustain the growth rate of 20% plus in terms of approvals, disbursements, top line, bottom line, and ensure that the underwriting standards are maintained, which is reflected today in our gross NPA numbers, which is below 1%.
Are you doing what a Narayan Murthy does in Infosys, Kapil? Because I remember our interactions over the last 9 months, and you maintained that you will do 20% in FY14, and you've done much, much better than that. Are you being conservative by choice for FY15?
We know that there is a huge market out there. The demand supply gap in housing is very big. By conservative estimates, the demand shortfall in housing is more than 20 million units, spread both in urban as well as in rural India. Honestly, 20% is what we have pegged our growth rate to be, considering a lot of factors. Obviously, the markets over the last 9 to 12 months, or rather 18 months, in terms of interest rates, have not been too kind for the financial sector as a whole, and which obviously gets reflected, on the consumers on the ground. So 20% is what we have pegged at. Anything over and above that, is a sheer bonus.
Afternoon, Kapil. Now tell us what the plans are in the insurance business, what kind of contribution we can expect in terms of profits from the insurance venture. That has been a big turnaround story for, from a DHFL standpoint. Post getting the approval from IRDA, and us, opening up the distribution that we have for sourcing business for the life insurance business, for DHFL Pramerica, that business has actually turned around. Other than all the efficiency parameters which the current management is looking into, we believe that this year we should be in a position to be in the black, and possibly give out some positive indications on payouts as well to the shareholders. But having said that, from a short to mid-term perspective, we're very clear that within financial services and with keeping the long-term vision in mind, housing finance, life insurance is our areas where we're going to be heavily emphasizing our management bandwidth in. What are your plans for the Avance venture, and what kind of profits can we see there in FY14?
It's a new startup venture, again, into a sector which is extremely underpenetrated when it comes to, whether it's infrastructure development in the education space and more so on the financing side. Primarily it's been a priority sector, identified by the government and pushed by the central bank. So banks have been very active in the education financing space, But we thought that it was important that we set up a unit which focuses 100% on that space, because all this while being in housing finance and being a focused player here, we felt that it's important that there be a focused approach towards lending in the education financing space. Some of what we hear in the market about education financing, the underwriting standards leading to high NPAs, etc., is a big problem. But we believe that once you have a strong focused approach in that space, it's a matter of ensuring that you do and you continue to do well.